Hello YouTube traders, it's Crypto Cowboy. We are on a Sunday here, the 7th of June 2020, coming to you with a weekly Bitcoin technical update. I haven't done one last week, so I owe you. But let's take a look and see what's going on. Let's begin. All right, I'm going to start by looking a little bit at the weekly charts and just go to a monthly for a second, and then we'll dive down into some of our smaller time frame counts and see where that takes us. But just looking at this weekly chart, just a simple, basic, clean, naked candlestick chart, you can see in here that the move in Bitcoin has been pretty much sideways, right? Since 2018, we've done a bunch of dancing up and down. So what I am noticing here, however, it's the fact that we are hitting a pretty important resistance level at this 10,500 zone. This level has been tested numerous times in the past as well, and with the memory that the market has, no wonder that this level continues to offer challenges to the traders. Just by looking at the candles, and if I go a little bit more on here, you can see that we're having a little bit of a reaction and rejection, I should say, from these levels, but nothing really convincing just yet. This candle continues to fight. And until literally we break below this 8,700 level, better to 8,640, 8,600, but you can see how we have this 1, 2, 3, 4 cluster of candles from the previous 4 weeks. The moment we break below these lines, the chances are going to be increased that we're actually going to continue to correct a little bit longer. Until then, the trend basically from March, from the beginning of March, it continues to be up, and this is the near term, and this is kind of where the price, what the price is showing us. Hey, I've been going up, and things that go up, they continue to stay going up until something knocks them down, and then they turn. So this is one indication that we could be in a little bit of trouble, but nothing has been confirmed yet. Okay, the candle closes here, I think, in a few hours for the weekly chart. So we'll see if we're managing to do more of a bearish close. But for right now, it looks like the market wants to close above the bodies of these previous candles, which is going to be a pretty interesting sign overall. And I'll take you to some of the smaller time frames to take a look at that. But this is just a simple, basic, naked candlestick analysis on here. Okay, so let's go to our monthly chart on here, and you can see I plotted a few dates with major swings into the market. So we see this from December 16, 2017, the swing low in December 14, 2018, 19, June 25, and then March 12. And one of our main indicators and signals here based on candlestick analysis is this bullish engulfing. I've been talking to the traders in our program for quite a while about this. Ever since we actually posted this, we were waiting to see how this month is going to close, and it gave us a pretty bullish close. Now, mind you, we are in June, so a couple of months after this has happened, but and we still are not able yet to crack this overall trend line. Now, this would be a nice indication that the market continues to move up higher, but as long as this continues to stay valid, so until the market starts to break, like I said, below those important levels and will start to move lower, then this candlestick formation will start to get invalidated. But until then, I wanted to give this benefit of the doubt, and I want to consider this a major signal going forward into the price of Bitcoin. So let's just kind of keep an eye on it. Never forget to always go back on the monthly chart and just see what you have there, if you have a little bit of a longer term perspective, and don't let the smaller time frame noise fool you into thinking that you're going to go thousands and thousands of dollars on one direction or the other, by ignoring those monthly candles and those monthly charts. I think those are important to keep you on the right side of the market. All right, so let's take a look at our smaller time frames on here and see where we are. So I have several counts, and this kind of shows you how you can count obviously something in a bunch of different ways, and you're trying to come up with your best interpretation. It's the best you've got. So we're going to start with the spin count, where we're going from the lows. You've guys seen this if you've been watching my videos, but we're considering this March 12 low a major wave too, and then since then we're starting to build a bullish outlook on here. So you can go this as being a wave 1 in a leading diagonal, wave 2, then another smaller 1, 2 on here with a larger third. I mean, this is a clearly nice impulsive move. So we can count this as a third wave without any problem. So 1, 2, 1, 2, 3. We have this as a triangle in the fourth wave. Previously, we switched it to a flat. It's fine both ways, but this one, what it gives the market, it gives a more proportionate wave 5 compared with this wave 1. So you can go in a 1, 2 of this degree, you go up in 3 in this minor, and now we should be kind of coming sideways here in the fourth wave. And I'm going to look to see what proportionality we get. But, you know, if we're getting another fourth wave on here, we're going to basically be sideways, possibly in another, some kind of a triangle. Maybe this is going to develop something like this in an A, B, C, D, and E, and then we break up higher, or it would be more of a another flat or some sort of a zigzag. Remember, this is a different degree than that. And then we break up higher and we complete this wave 1. So very possible that we're going to get some more of this under this pin count interpretation, so don't be surprised if that happens, and can still take, you know, quite a bit of time. You can see that I've measured on this fourth wave of this minute degree, and we're comparing this with the second wave, and at about 200% on May 20th, you know, the market started to rally. Actually, let me go down a little bit to make sure I'm correct on that. Yep, it was about 200% here on May 24th or May 25th, whenever this was, when the market kind of reached the low. So you can see how sometimes, you know, it's good to use this fib time analysis as well, and you have that into the trading view. I actually have a nice video with a lot of views about it, and you know, you guys can check that out. I'm going to post it on here, but it just kind of shows you how to measure the lines and the time fib ratio on the trading view. This is motive wave, so this kind of does it automatically with the touch of a button, but up there you have to do a little bit of work. Okay, so this is basically, we're looking here on the 6-hour chart, so we're still expecting more of a sideways move as part of a fourth wave. If I go to a 12-hour, pretty self-explanatory. Now, if I go to the red count, which is for right now, you know, my favorite count, I should say, we can count this a little bit differently by getting rid of 1 degree on here, and you can go in a 1, 2, and there's this whole thing is a third wave, and it starts down here through a 1, 2, 3, 4, and 5. You do a third wave, and you have a 4, and now we're in the middle of building this fifth wave up. And what we're thinking here is that this first initial advance on here, it's a wave 1. Whatever happens since then, it's a second wave, and now we're going to try to break up higher in this larger third wave of this wave 5th, and I'm going to put the counts on right now. Let's see. All right, there you go. So even if I go to this count, you can see how I have this kind of spaced as a 1, 2, or the 2 is still in progress, because you can do an A, or you can have a W here and an X, and then you can do another ABC down for a second wave, so you can have more of a complex correction. As long as you stay above this 86.4 level, this is game on, and we should be fine. And you can see how nicely the market respects the trend line and the channel, and you know, we could be looking higher, while everybody is looking necessarily at this as being a failure from the top side and an indication that we could be selling lower. You know, the market continues to respect the uptrend, which is very important, because you know, it's just clearly showing us that it's not necessarily confirming this fake out. The moment we break below this 8640 and then we start to drop lower below 8,000, then we have more of a bearish outlook. Until then, we're going to continue to stick with this. So even on a smaller time frame, I show you here the other count. So this could be a leading diagonal, an expanding leading diagonal in a wave 1. Now I know I have some sort of a missing data on here, because on this crypto compare I'm not as low as some of the other markets dropped, but still this could be considered a wave 1 up. This is a second wave pullback, and we're doing basically this a 1, 2. And if this is another 1, 2, then this rise should be pretty sharp up here by tomorrow. So we'll take a look and pay attention to that under the red count. Now the blue count interpretation is a little bit more bearish, because this one considers, and this one it's got its own validation, because you can actually count this as a 5-wave move to the top side through a wave 1. You know, we're switching where this wave 1 is located. Instead of up here or here, it's located up here. It's still perfectly fine. Works as a nice impulsive move in a 1, 2, 3, 4, and 5. And then you have a second wave, and then this is clearly an impulsive move again. 1, 2, 3, 4, 5, 4, 3, flat in 4, and then, you know, a pretty disproportionate, but you know, I think it's a perfectly legal wave 5 of this larger one. So if this is the case, then wave A should drop up here in 5 waves. This is a wave 1, although I have trouble finding it as such because it only looks like a 3-wave move. But this would be a 1, 2, 3, 4, 5 for A, then in B, and then down in C. If this wave 2 should be a zigzag. Remember, this wave 2 can take any shape it wants, but this would be the simplest shape it would take in the form of a zigzag. The next one obviously would be a flat, as you cannot have triangles in a wave 2 position. This decline would try to correct this whole move somewhere into the 38%, maybe even down into the 61.8%, which is the golden ratio, coming to about 5,700, between 7,200 and 5,700 pullback as part of a wave 2. But I don't have enough indication yet that this is happening. Again, we have to break some key levels, and then we're going to switch to this count on here. All right, so the other one that I have on times of a longer time frame is my yellow count interpretation. I've been presenting this in my previous chart updates. We're considering longer term for this to be a triangle where this is an ABC up. This move can be counted also again in 3 waves. It's obviously a zigzag, so you have a wave 1 or A, right? And then you have a very small B, which I'm not happy with, and then you have a 5-wave advance here as part of this wave C. We should complete this D wave. Now this D wave is very disproportionate and awkward looking comparing with the other legs of the triangle with the C and the B wave, so I don't give this a high probability, but the market remains to show us if that's the case. Again, a break below this ACC 40 would be important, and the decline would follow something similarly with what we have in the blue count, and possibly instead of a 2, you know, in a wave 2, we would have some sort of A wave. And if you have an A wave, obviously it needs to be impulsive to the downside in a 1, 2, 3, 4, 5. If you have a second wave, it needs to be a 3-wave move. All right, so this is all I got for you guys for today, and I hope you enjoyed this video, and give me some thumbs up, subscribe to the channel, get those notifications, come and visit us into the Pro Room, give us a try, and any questions or suggestions, leave them up in the comments. And again, I thank you very much for watching, and I think I'll see you next week. Bye-bye.